Welcome to season 1 of More Money.
Episode 2 of More Money, man. So we are back in action. We are here today, bro. Man, how you feeling?
I feel good, dude. I had a great long week of travel, and I'm happy to be back. But I was also really happy to see a lot of my MBA colleagues and friends over the last week. So
you okay? I know what we're talking about today.
Cool.
But you went to MBA this past weekend.
Yes, I did.
In Philly.
MBA in Philly. It was awesome.
Oh my God, Philly! They just beat the Dolphins.
Did they?
They beat the Dolphins last night.
Dude.
It was
and my Giants won.
What? Bro, you're 2-5, bro.
Hey, listen, they won a game. That's all I can hope for, you know?
2-5, bro. Look at this guy bragging about his 2-5 record.
I brag anytime there's a win over there.
A win is a win.
Yeah.
So talk to us about MBA National, man. So number one, tell our clients what MBA is first and foremost.
Sure. So MBA Annual was this past week. Stands for the Mortgage Bankers Association. In our industry, that is the Super Bowl of mortgage conferences. It's the kind of like the end of the season, and you know we're culminating as a big group of people from, you know, mortgage, lending, title, insurance, all the vendors, the technology, the agencies, and agencies like Fannie, Freddie, HUD, etc. So you got so many people there. You've got everybody there to listen, learn, and just to pick up whatever they can pick up.
Bro,
one of my favorite conferences.
Since you were there, what are your 2 big takeaways from the MBA?
Whoa,
give us how are they going to affect our viewers and loan officers?
Right. So one of the coolest things that I got to participate in was a panel in regards to technology and where we're going, what we're doing, how we can save money, how we can do things. So one of the biggest takeaways that I found at the conference, specifically in that space, was that there is a even greater push to find, you know, these technology enhancements to the business so that we can save dollars, right? Right now it costs over $1,000 not even cost $1,000. It actually, a lender makes negative $1,000 on every loan that they do. It's like more than that. I don't remember the exact
because number. Of what? Because of all the expenses that they had?
Yeah, just overall expenses and how much it costs to produce a loan. So it's a negative number, so it means nobody's making a real profit. And then those people that are making a profit, maybe they found some ways to get around it. So, you know, that was one big thing. One big thing was cost to produce. Another big thing, and this was probably the most prevalent item that I saw during the entire conference, was that there was kind of like a overshadowing haze amongst everyone, right? The excitement wasn't the same. The sentiment wasn't the same. And I get it. We're in an environment where people are not attending the conferences because they've got to cut back on budgets. You know, people aren't making as much money. Everybody's looking for a way to figure out how to serve the underserved, the unserved. And so, you know, there's a lot of noticeable absence from the industry. It's a lot of noticeable, I want to say it's almost like a missing excitement to be doing what you're doing. So those are the 2 biggest things that I noticed while I was there.
Damn, that's big, bro. That's big. So lenders not making money and just a lull in the
yeah, man. You know, just feels like somebody turned the music off. You know what I mean?
Oh, for sure. The club closed. Yeah, club closed. 2 a.m. Lights are on, bro.
Exactly.
It's man. I mean, your experience. You've been in this much longer than I have. 9 times about that, right? Yeah. But I mean, you've been in it so much longer than I have, so you kind of know the overall experience of it, right? I feel like the mortgage industry for the last 2 or 3 years was like, I don't even know, like just an insane party, like just a club where everybody was just having a good time. I don't think anybody was having a bad time.
Reality is the mortgage market works in cycles, and so does the majority of the U.S. housing market, right? Whether you're talking about building homes, whether you're talking about selling homes, whether you're talking about financing homes, whatever part of the overall industry that you fall into, it was a real big party for the last 10 years, and there was a lot of great things happening, and people were doing really well. And right when we thought things were going to get not so good, 2020 came around, and all of a sudden there was a boom. And, there's been like this never-ending party. I think we missed the cycle. That's the right way to phrase it. Usually it's about every 7 to 8 years we run into some type of down cycle, and we just missed that this time around. And
we went straight to the up cycle, baby.
well, we just never left the up cycle, right? So the club didn't close on time. Like somebody forgot the security guard was missing from the door. He's just letting people in.
And now the security guard, aka the Fed, is coming.
Yeah, man.
So I mean, bro, rates are at 8% now. Rates are at 8% now.
8%,
I think the party is coming to a close, man. I think, rates are now at 8%. So I think today's topic of what we're speaking on, and it's basically a lot of what you went into on the MBA side of things, where you're seeing a lull. Now we're trying to talk about how can you create a successful loan business or be a successful loan officer, branch manager, or any type of position or role within the loan industry, right? Which is the mortgage industry, right? How can you create that and prepare yourself for the next boom?
So it's a big question. There are a lot of tactics and strategies on how to get there. I think we do a really good job at it, right? We are 100% focused on how do we capitalize on our own networks. I'm a big proponent of build it off of the people you know, continue to market to the people you know, capture your referrals from the people you know. As you know, I really don't solicit business as hard as the LOs at work here, but in the same vein, I do not solicit realtors, right? I don't chase realtors. Now you do, and that's fine. These are two different strategies we use to, maximize what happens here.
Maximize the earning potential.
Yeah, so that's one of the biggest things is I don't do that. And I think in a down market, that is one of the primary ways that you can continue to see your business come to fruition is by removing your focus from who else is out there trying to get their own business and focusing on, hey, who do I know that knows what I do that will refer me to other people that they might know that are looking for business?
I always say that all the time. I'm such a big proponent of, man, if your family or everybody doesn't know what you're doing, what are you doing? Like you shouldn't be in it, I think that, point, that's why I'm so big on social media. That's why my thing is very much on social media, which is why I implore everybody watching here, if you don't have a social media channel, you need to get one. You need to get on social media by any capacity. You don't have to start by posting videos, creating podcasts, or editing. You simply just got to make a video like I did, Mortgage Mondays, right, on my camera, get your partner to film them, and then if they like you enough, they'll also edit them, which was my case. But realistically speaking, on top of that, what the primary idea and what I gave from that was basically everybody that in my circle knows what I do. I think that from social media, just from that aspect and being labeled as, Mortgage Loan Joe on social media on Instagram and just kind of coming across that, right? Hey, what do you do? Oh, I help people find financing. I help realtors and clients and just general people secure the financing for their home and for their real estate needs, right? I think that being able to incorporate that in most of your conversations when you have with people, being able to grow that or just talk to people and understand that from their perspective is a completely big thing. And I see that a lot from you. I see a lot that you don't solicit business, but when you get into the rooms that you're supposed to be in, right, you get people to know what you do, whether you know them or you don't. And you're not soliciting business, you're not asking for business, you're simply having a conversation where you create the allure as to, hey, what is it that you do? And when you give it an interesting sense to it, right, I think it's the delivery of it. I think it's the way that you converse with that.
Yeah, I'm an extrovert, right? I am out all the way. And I'll be in a supermarket and standing in line and just strike up a conversation with the person in front of me. I'll be at an industry event and talk to every stranger there, right? Even if it's just passing by. Mm-hmm. And then wave at them later like now I know them or something. And, those conversations that spur from any of those interactions are ways to, let somebody know this is what I do. A really good example, and I don't even know if I told you this story, man. I was up at the Audi dealership about a month and a half ago, and I was getting my car serviced, right? Mm-hmm. And I was sitting there, and there was a woman sitting 2 chairs over, and she was on her laptop working, and I was on my laptop working, and then the Wi-Fi went out real quick, and we were like, oh. And we're both kind of looking around, and I was like, did your Wi-Fi go out? And she's like, yeah, did your Wi-Fi go out? And I was like, yeah. And for 5 minutes, we spoke to each other. Ended up, her and her husband and her family were looking to build their own house. So Ashley got her number, got her email address, spoke to her and her husband on the phone. And it was because I never let go of an opportunity to talk to whoever's around and use that loan as a lead for somebody, but now it's a lead.
Yeah.
And somebody else is working that construction loan.
That's crazy, man. That's the little things, man. The little things of having those types of right conversations, not with the right people. You didn't know if that was the right person at all. It was just a person. And I think a lot of times we as loan officers, what we do is we instantly classify somebody as non-qualifiable, even though we don't know them. Even if it's just a random person that we deduce from our mind that we're like, hey, no, this person just won't fit my box. This person's not trying to buy. So we don't even make the effort. Yeah. But you never know what that conversation can lead to.
Yeah, and that's why I make every person a relationship, some form or another. You remember Edith, the nurse?
Yeah.
Yeah, so I won't say her last name because we don't want to give anybody's information out, but Edith, the nurse, she came to us 2 years ago.
2 years.
And she was in the middle of getting divorced, and she has 2 kids, and she didn't know how she was going to keep her home, and she was in a troublesome spot. She cried in our office for days, right? Every time she kept coming back with new paperwork and crying, and I sat down with her the whole time. And the crazy part was she barely spoke English, right? So I'm sitting there going, man, I got to get somebody to translate. So I either had you in the room or had somebody else in the room with me. And man, even to today, 2 years later, I still email, text, talk. How's everything going? Has the court case closed yet? Are we ready to make a move? And that's a long-term person that turned into a client. And it was because anybody else would have said, no, there's no way. I don't have time to spend on that. I said, sure, you know what? Let's figure it out. And we'll keep in touch with you. You keep in touch with us, and come in and we'll figure that out, however long it takes. So here we are 2 years later, now trying to figure out exactly how to do our refinance with the divorce decree in place.
Wow. That's amazing, man. It's those longer term stories. I think I have a few of those where I just kind of meet somebody, stay in contact with them, and just kind of just create that relationship with them and just continue to move forward with that. It's funny because I had this realtor, she called me the other day, and for real, it was somebody I had closed a loan with in January, right? Very basically, what happened was that with this gentleman, whatever, she referred me the deal 9 months ago, right? And then she referred me that deal, and then now we're working together. But she calls me out of nowhere. She's like, "Hey, listen, I just wanted to tell you, I really appreciate working with you." And I was like, "Oh, that's great." She's like, "I went around. I'm not gonna lie. I went around. I shopped some people. Like I talked to other lenders, and you know what? At the end of the day, just weren't somebody that I could trust, that I could just feel confident with, that I could just feel great with, right?" I'm talking about somebody who has probably closed 1 or 2 deals this year, straight up, 1 or 2 deals this year. And somebody who I've just always been kind to, always taking the time to be on the phone with for about 20, 25 minutes if I needed to be. And there, she was grateful for that. And now her brother, who is looking to buy a $1.5 million home and expand to commercial lending to purchase 10-unit multifamilies. He's like, I want to get into this type of stuff. And I'm like, all right, great, man. I'm here to help. We're now experiencing that with her. But it was just because of the personality and the type and the goal and the way that I spoke to her and the way that I cultivated that relationship that 9 months later, we're talking about this type of thing. And in another case, right, another lady that I was trying to call during January, I was trying to call a lot. I was trying to cold call, right? And it was just kept getting cool with her, seeing her on Instagram, would comment on Instagram, just simple stuff like that. 9 months later, she sends me a deal. She's like, hey, the guy that I had didn't work. I worked great with that client. The client did not qualify, but I gave him the time of day. I spoke to him, everything great. And then he could have qualified, but now she referred me somebody else, and we're now under contract for a $500,000 home. Yeah. So I was like, all right, man, dude, this is, this goes well. But I see that being prevalent now in this industry. I see now being prevalent the relationship building aspect and the not so much of, hey, I have to go after the heavy hitter and really hound them, and I need a realtor or somebody that does it consistently 10 deals a month to give me a deal. No, like it's about your circle and your network and your database.
Yeah, so number one thing to make sure you're paying attention to in this market is, fostering relationships, whether those are your people, your family, people who may not be heavy hitters but are trying to be up and comers. You'll be surprised where you find the best results, and they're not always in the most obvious places.
That's so true, man. It's actually a funny story. That's why I've taken up golf. I have taken up golf now. You know this. I've gone to my lessons and stuff like that. And I'm taking up golf now because I personally want to go out on the golf course by myself and just get paired up with somebody and just start playing golf with them. No matter, I could tell them, hey, listen, I'm not a very good golfer, but I'm here, but I want to do it because I want to have conversations with people. I want to start talking to new people that I wouldn't talk to in another case, right? Just kind of expose myself more and more. And I mean, relatively speaking, it's not extremely expensive to go have an afternoon out on the 18-hole course. Probably costs you $20 or something like that to go out and enjoy yourself. But
What did you say, $20?
yeah, it's $20 18-hole courses. You make a suki, $26.
Oh, all right.
Yeah,
Make
you
a
should.
suki. I got to find that place.
You gotta head out there. Yeah, it's pretty good. So, but it's relatively not that expensive, right? And you could go, and instead of going and spending it on lunch or whatever it is, right? You go out there and I golf or whatever, and I speak to them, but I got 4 hours of uninterrupted time with them. So, and if I meet somebody there that is, by any case at any point, somebody who does business or anything like that. And also you can invite relationships too, right? You create a relationship and you say, hey, are you golfing? Do you golf? Yeah, I do. Or you want to go golfing this weekend? And create a deeper, meaningful relationship with that type of person.
Yeah.
That's just my experience from this one activity that I'm taking on, because at the end of the day, everybody wants to go out, everybody wants to go to bars, everybody wants to go do this, right? From somebody who doesn't drink at all to, somebody who's really trying to change and move forward in a different place. I've had to figure out, hey, how can I, a 24-year-old, find a way to connect with other people that is not at a bar? And you would be shocked. It is very hard.
Oh, yeah, no, absolutely. I wouldn't be shocked at all. I actually noticed that as I get older, I have plenty of friends who still drink regularly. Now, mind you, I don't not drink at all. I save those for very rare occasions. But you're right. I mean, everybody's first thing is, let's go to a bar. And I'm like, why? I can barely hear you speaking. The music's blaring, everything else going. I play golf. I absolutely know what you're talking about. And I have done that before, where I go, well, usually with some other person, and then kick into somebody else's foursome, right? So that's great. Now we've got 4 and we're with 2 people we don't know, and pretty cool way to meet some new people and to maybe, find somebody who you might be golfing with in the future. Could be somebody that you like to go out with regularly. So
that's what I'm saying. It's not just so much as business oriented. You could actually meet friendships. My trainer, shout out to JP. That guy's awesome, man. He's 22-year-old guy, bro. Great golfer. He's been golfing for 20 years or whatever. But this guy golfs in, we're talking about Fisher Island.
he's 22?
22. He's 22 years old.
And he's been golfing for 20 years?
Since he was 2 years old, yeah. I told him the same thing. I was like, 20 years? He's like, yeah, I've been golfing since I was 2. I was like, good Lord. But he's been golfing for 20 years, but he's golfing in places with his connections, Fisher Island, the Bahamas, where famous people golf, where you need to get big entrances. But he's gotten there because of what he's been doing in the golfing sphere, right? He does amateur pro tournaments and stuff like that. So it's really impressive. And I'm like, man, I would like to be there. And he's like, hey, when you get to a certain level, right? It's like you're still very far off from there, but when you get to a certain level, you can start golfing with me and my buddies for fun, right?
Sure.
And just being introduced to that type of network as well is a plus in its own, right?
No, yeah, it makes sense, man. Honestly, like I said, number one is definitely just that relationship. We've got to be able to maintain our relationships from all sides of the fence, whether it's any of those categories we put down already or just making new ones, man. That's the number one way to figure out how to survive in this market.
Well, you came from the compliance side. You've been in origination before, but your last 10 years were not in origination,
Yeah, so I started in servicing. I was actually on the operations side, so I ran an operations facility for many, many years. And then went to compliance. So yeah, the last 10 years prior to coming here were...
You weren't originating any loans, right?
No.
So that's what I'm getting to. You weren't originating any loans, right? So the people that you met in that sphere were generally not originating many loans either, right? Yep. But those contacts today have helped you originate loans here.
Absolutely. Everything I learned on the compliance side helps me to guide people on their investment strategies and how to... make the most of their dollars to buy more than one house, and what are the loopholes. And yeah, so a lot of those people I met who gave me a lot of really cool tips, exact same things I use for my client base so that they can actually reap the utmost benefit of buying a home.
And so your knowledge base from there. So when we're talking about what type of tips, what ideas we have to make yourself successful in this market is not just being able to originate a loan. Anybody can originate a loan, but to be able to access specialized knowledge like Roy has and being able to divert your client to the proper channels of investing. If somebody comes to you and says, hey, I have this idea, being able to offer them more value than what they asked for, that's a huge tip.
Yep.
And you can do that whether you're getting the deal or not. Because there's been times where I've given advice and another loan officer has closed the deal, and I'm perfectly fine with that, because guess what? When the client thinks of who closed their deal, it's not that loan officer there. When they're referring another deal, it's me, and that's where it comes to the relationship piece, right? Yeah. And I think that's a clear-cut case in one of the examples where an online lead access to our portal, and he came in, he's like, I already have a house under contract, and I was like, all right, great. He brought him into the office the same day. I showed him the rates. I was like, hey, this is what you'll get. We spoke about your ideas, your strategies. Hey, you should probably lift up your credit score to do X, Y, and Z, And he was already under contract. I didn't hear from him again. A week before he's about to close, he calls me again. He's like, man, dude, do you really think you can get my loan done? Blah, blah, blah. He's like, I think I'm paying too much. And we could do it for substantially cheap. But I told him, man, listen, you're a week out from closing. I'm not going to try to just take this deal from you and then lose your escrow deposit.
Yeah.
Right?
Yeah.
So what you should absolutely do is X, Y, and Z. Come to see me in 6 months so that we can properly guide you into those routes. And now in 6 months, he's going to come to me and he's going to say, hey, I need you to refinance me because I know you got lower rates. And that relationship from an online lead application was that. So I think it's number one is relationships. Number two is provide as much value as you can, whether you're not reaping any instant benefit. And what would you say would number three be?
For me personally, it's actually based off of you, right? So the number three thing, and it's so cliche, but the number three thing is the work ethic or drive, right? Like, think about when you got here, man. You weren't in this business, right? You hustled harder than everybody else, and you've been able to maintain, a volume all the way through to the point where you became an executive or owner of this company. And now you don't do your own volume anymore. You pass it on as leads, but still that drive is what keeps you here. I think we're going to see a lot of people fall out, right? So relationships, the hard work, the ethic behind it, those two things paired together, it'll get you somewhere. But adding value in the form of knowledge or in the form of the how-to, those three items are going to be the biggest three items that you're coming across right now.
I appreciate that, bro. Actually, you just gave me a thought. You just gave me an actual thought. Actually, one of the biggest things, so from guiding off that, I think the persistence factor that you're talking about, the work ethic, listen, persistence doesn't know failure. If you're persistent enough, you will get it. And it's just a law of nature. It's I believe it was, what's this guy's name, man? I think he was created, Edison, failed like 10,000 times before he got the one time correct. I think that's the story there. But Edison failed 10,000. You know what Edison failed 10,000 times? I don't think I could fail 10,000 times, just straight up. But that one time, and then from that one time sprouted all the success that he's ever had in his life. So I think that persistence, but mixed very, very well, and this is even more cliche, is with the correct mentor or mastermind or alliance and group, man. Yeah. I think that aligning yourself, ever since I've aligned myself with you, and we had this conversation back then, if you weren't here, I probably don't know what my current standing in this business would be, right? Yeah. But with you, I have more faith and hope than I ever have.
You got to have some foresight too, right? I mean, I probably wouldn't have said this out loud 2 years ago, but I did say it to you 2 years ago, and I could see the writing on the wall, right? 2 years ago, when we thought everything was just going just fine, I looked around and I said, these guys aren't going to make it. You remember 2 years ago, I told you, what's going to happen? I'm going to end up owning this place by myself because these guys aren't going to make it. And, just follow the path. And we were absolutely right, right from day one.
That's crazy.
And so you're right? The proper mentor, the proper group, proper, social setting or circle of influence, whatever you want to call it. I used my certified mortgage bankers group as a group that I bounce things off of. I have a lot of friends in that group that I contact whenever I have a question or if I want to possibly, get a sounding board for something. Today, I went to Starbucks, right? And I met with a technology company that's in our industry. And man, honestly, when that conversation was over, it was more about, hey, can we do this again? Yeah. Just to sit down and
just to talk.
And talk. Yeah.
Just talk. I think that's the key thing, like aligning yourself. I have a buddy of mine, I'm not gonna say his name, but he's a loan officer. We've had dinner with him or lunch with him, right? I think that he was at a point where not that he wasn't producing. He's always been a pretty good loan officer, but I think he was a point where his business was kind of slowing down a bit. And he's actually now, he paired himself with an older gentleman who also does mortgages, but through a different city. And now he's prospering with him because he's been able to align himself with somebody who I guess has a little bit more knowledge, a little bit more understanding or experience in the market, and now he's killing it. Now he's thriving. And I think that that's one of the key things that, realistically speaking, if you can't right now produce for yourself, or you can't find that you're not succeeding by yourself, connect yourself with somebody who knows more, but provide value in a sense, right? Roy doesn't just have me here because he likes me. I mean, he kind of likes me or whatever, but he kind of likes me, but the main thing is that he sees some sort of value in me. He sees some sort of value where I can offer, in a sense, and I'm not tooting my own horn here, it's the basic reality of it, but I see value in him, which is why I stay, which is why I've continued to grow what we have here and what we're growing forward, and why I continue to hustle.
Oh, man, I thought we were doing a podcast, not like a hug it out session.
Don't worry, we'll hug it out.
I appreciate that too, man. And that's true. You know, I would think that's another good piece of advice in today's marketplace. Listen, if you're not making it, go find some place where you can be an LOA. Maybe you need to take a step back for a moment. You know, if you feel like you're not able to generate business, go partner up with somebody who could teach you how to generate business in this environment. You want to figure that out? Go call somebody at that company. More Lending. Maybe they can help you figure that out.
Yes, they can.
You know, there are options out there. If you're not figuring it out on your own, there are options out there. And please don't sit there waiting for interest rates to go down. Yeah. We don't know when that's going to happen. Everybody can predict something, but we don't know. Absolutely. It could be another 12 months from now.
100%. And I'll leave you guys with this. I think that right now, in this point and in this market that we're at right now, I think that for the next 12 months, you need to have a reshift in your mindset, right? A reshift in the paradigm of it. At this current moment in my time, in my business, I'm not looking how to make the most amount of money in any given month, right? I think we are all looking for that in a certain sense, but it's not the number one drive. It's not the number one focus right now at this time. What it is planting the foundation, planting the seed. And if you need to take a step back and follow somebody else and take a pay cut, take a kind of a different shift in perspective and grow within that climate, do so, because now is the time to do it in the downward market. Because if you plant the correct seeds, you plant the correct foundation, when the market goes up, you know, let's say 12 to 24 months, right? When the market starts to shift upwards, right? Not that it's going to become 2020 again, but that it's going to get better. You're gonna have more opportunity. By planting the right foundation through this market, you're gonna find yourself so successful and so overloaded with an abundance because you took the step back and you're like, hey, I need to build my floor.
And you good?
Yeah.
So I'm going to leave you with my last thought too, and that's find the right place. Everything Joel said is correct, but find the right place. Find the place that's preparing for when the market gets better. Find the place that's doing that in a physical format where you can see it actually happening. Do not listen to, yes, we're building for the future. Show me. Show me how you're building for the future so that I can feel comfortable being here with you, doing whatever it is you're doing to grow your business for the next cycle.
And on that note, our next episode of the More Money podcast, we're actually going to be diving into how we're preparing for the future, how we're growing our business, our loan officers, and what tech stacks and stuff that we're using. We're giving away this knowledge for free because guess what? We're collaborating. We're creating relationships. We want to see people grow because there's a lot of money in this business, and I think there's more than enough money for everybody.
Yeah, I agree.
All right.
See you later.
More money, we out.